Welcome back, everyone. Our next presenter is DSS Inc., ticker symbol on the New York Stock Exchange, DSS. It's a multinational company operating business segments in blockchain security, direct marketing, healthcare, consumer packaging, real estate, renewable energy, and securitized digital assets. Its business model is based on a distribution sharing system in which shareholders receive shares in its subsidiaries as DSS strategically unlocks value through IPO spinoffs. Under new leadership since 2019, DSS has built the necessary foundation for sustainable growth through the acquisition and formation of a diversified portfolio of companies positioned to drive profitability in 5 high-growth sectors. These companies offer innovative, flexible, and real-world solutions that not only meet customer needs, but create sustainable value and opportunity for transformation. So attendees, please submit all your questions for DSS through this webinar module. And let's welcome the CEO, Frank Heuszel. We have COO, Jason Grady, and CFO, Todd Macko. Welcome, gentlemen.
Well, welcome. Thank you for inviting us here. We look forward to presenting to you information about DSS, where we're at, and where we're intending to go. There'll be a slide presentation here that'll be coordinated by Todd. Todd, to start off, let's go ahead and pull up slide number 2 about the forward-looking statements that we're going to present here, that they are intended to be only expectations and forward-looking statements. So with that caveat, I'll go ahead and start with our slides. First, we joined and started up DSS, then called Document Security Systems, in 2019. At that time, DSS was a printing and packaging company, as well as an IP monetization company. At the time, we were solely that. We had been that role for many, many years. Since then, we have decided and needed to change the business model and the business strategy. We changed it by transitioning the company's revenue streams into exponential emerging new business lines that we had identified. We also wanted to change the operating of the company to create growth opportunities on scalable reoccurring revenue. We also wanted to restructure and develop our assets to positively and position them to growth and potential monetization. So our strategy then delivers the shareholders' value. The plan is to develop solid revenue growth, increasing profitability and growing the assets, which will drive stock price and market cap. We want to build long-term shareholder values by increasing assets through mergers and acquisitions. And we want to provide a unique dividend structure for our shareholders where they can build value and monetize assets with our investors through investments and assets that we grow. A little bit about the investments and where we were. 2019, when we took over the company and started to revamp and reorganize the company, we were about $19 million in assets. Again, we only had 2 really primary business models, and that was an IP monetization where we took assets, patents, and tried to monetize them by pursuing larger fish who would be violating those patents. We also had a very small but profitable printing and packaging division. Today, we have over $219 million in assets. In 2021, our revenues grew to $13.2 million, which exceeded revenues for 2020 by 30%. Since then, we've made significant investments into REITs. We've also made significant investments into purchasing and managing quantitative mutual funds. We have also made a significant investment into Impact Biomedical, which is a biohealth, biopharmaceutical company we purchased. And since then, we've also grew revenues 12% from time to time, from $3.1 million in 2020. Forward will be some investment highlights. One of the items that we just recently invested in is American Pacific Bancorp. American Pacific Bancorp provided us an opportunity to help finance growing companies where we could help make them grow as well as while investing in them. If we invested $40 million into that company, primarily that entity has banks stock as holding. It also allows us to make loans to these investments. Currently, we expect to loan out about the $40 million in the next 6 months. I think we've already lent out about 23 on that. that company then has an average return on its investment on its loans of about between 8 and 12%. Next slide. Our business methodologies to increase shareholder value. We want to focus on selected growth sectors. Sectors or business lanes where we believe we will be highly successful and help maximize our positioning in the global markets. We've identified 5 growth sectors in which we identify companies and we want to have ownership in or investments with. And those areas include direct to consumer, we'll call online sales. We want to be in the biohealth, biomedical divisions, certainly in the securities funds management, as well as I'm going to call banking and finance sectors, blockchain, and also in renewable energy. We have identified these markets because they each represent a huge growth opportunity, not in just US, but in our global sectors, so allowing us to capitalize on our strengths in these regions like Asia. We have a growth opportunity that also can be managed by our team of experts. We have untapped values related to our standards before we initiate our ownership percentage, because we know the market, we identify people that can help us in those markets. We maintain monetization options also. As we grow these businesses, our experienced management team also knows how to monetize our positions by operating, holding, selling, or selling those assets and financing them through future growth. These options allow us to choose the more profitable monetization options, and the options that we usually look toward is operate for revenue earnings, engage in joint ventures where we can create opportunities either through a monetization or through earnings, or create the companies and organize them ourselves and take those to an IPO. So to go over the sectors and a little bit of reason why we selected these 5 business sectors, I will go through each one of them if I can, but just to point out our transformation over the year, this 1 year, 2021 to 2020, our revenues have risen 30%. Our shareholders' equity has increased by 160%, and our total assets have increased by $127 million. So first, direct to consumer sales marketing. So 2019, we believed that we should be in the online marketing, online sales to consumers, directly to consumers. And the reason why we believe this at the time, this is before COVID, is that we believe that that marketplace would replace their typical retail sales, store outlet, malls in the marketplace and make it convenient. And that has proved to be true. 19.2% growth rate over the steady 4-year growth, a double-digit growth in this industry. And this industry allows us to have direct to consumer companies to manufacture and ship their products directly to the buyers without ever relying upon traditional stores or middlemen. This allows us to sell our products at lower cost, the traditional consumer brands to maintain end-to-end control over our marketing, our making, and distribution of the products. The market has been growing, as I indicated to you, on a double-digit growth for 2021, so that's positive. Consumer packaging, which is related to that because we are in the packaging business as well, has increased in this same area. It will surpass $1 trillion in expected size by 2028. We also have an interest and have some abilities to also provide counterfeit product services to our customers. And in that range, counterfeit products are expanding at a rapid rate as well. And the need for counterfeit products is also going hand in hand with the growth rates for this industry. And finally, authentication brand protection market, that was valued at about $3.94 billion in 2018. Today, it's grown by 2026, estimated to be about $7.6 billion in growth. So those are factors which convinced us that we need to be in this marketplace. Slide 8 there. All right, so where are we at? What is the assets that we purchase in this marketplace? So we have 3 assets that to serve you. HWH is an online direct marketing company. It has an array of products that it sells here in North America, primarily US and Canada, although it also has offices in Malaysia and other offices around the world. But it sells a lot of products of food, cosmetics, healthcare products, and it does so on a direct marketing platform. The second investment is in a company called Sharing Services. Sharing Services is also traded on the OTC under the symbol SHRG. This company has a extensive network of brand partners where it sells a similar array of products of health products, food, cosmetics, and in certain drinks and specialty drinks. It has also developed a product which we believe is going to be significant as the boom travel returns to the marketplace. They have a business travel program that will be rolled out, and that will also allow us to maximize and to opportunities in that market. We have lent about $30 million to this investment. It's a loan that we anticipate being repaid as the company returns to profitability. Next. We're also, as I indicated, have our third is Premier Packaging. Premier is located in our Rochester area. It provides innovative designs, deliver functionality, marketability, sustainability, and counterfeit technology to our consumers. We have a portfolio of digital solutions and technology. We can provide brand solutions and revolutionize the active intelligence packaging. This packaging group, when we joined, we had sales of about about $15 million. Today, we're over $19 million in projections. We have been able to expand our growth in there. Currently, we have no other available demand capacity. We are currently filled up for our 2021 and part of 2022 capacity. Because of that, we're expanding the facility. We were going to double the size of it to 105,000 square feet, and we will then be able to address the demand that we have. Again, our fabrication grew to 27% year over year on this division. We expect that to almost double our sales capacity over the coming years. Next, the healthcare focused on biomedical, biohealth. This division alone, and we believe, is a $1.3 trillion industry. This industry allows us to provide health care to different sectors of the consumer. So it would include biohealth, it would include life sciences, it includes digital health, biomanufacturing. It also is a rapidly expanding industry for us because of the different type of jobs that are now available in the gig economy. It allows us to then provide our products directly to the consumer. The investment we have, the largest investment we have in the organization is in this industry. We have invested into Impact Biomedical. Impact Biomedical provides research and development that advances drug discoveries and development of the prevention and inhibition and the treatment of neurological and oncological and immuno-related diseases. In our products, we have many exciting products, and I will just go over a couple of them, but I will quickly. We have a functional fragrance, 3F, that is provides antiviral as well as mosquito protection. We have an Equivir product, which is a patented OTC medication with broad antiviral capacities. A linebacker platform, which allows us a universal platform for therapeutic treatments. We have an alternative sugar that helps us, and we believe will provide benefits to diabetes patients. Biohealth product and gut product. And then finally, a recent development, we have bioplastics, where we have infused into plastics the ability to fight viral and viruses. Testing has initially shown that this plastic has the ability to kill viruses within 1 hour of its touching the plastics. We have other inventions and discoveries that we've made. I would expect in the next 12 months that you almost see doubling the size of those type of discoveries. This is very, very exciting for us in this sector, and we're excited about the opportunities and expectations of licensings that will be generated from this group in the very near future with major players and joint venture partners.
Frank, if I could just add for Impact Biomedical, simply for this audience, Impact Biomedical is a unique provider of differentiated technology to improve human health and wellness, with most of its products coming from natural-based products.
That's correct. Yes, naturally based botanical sources. All right. The third sector is this securities and funds management, which also includes our funds, our financing, and our banking. This division here, we initially got into this sector because we believed and had very much interest in the REIT side of this business. As the slide shows, that from 23% to 44% of households have doubled their investment into REITs in the last 2 decades. So it's a great opportunity. We also had great experience at it with our management team. So just a little bit about the real estate market. You know, most of the commercial real estate markets are having some questions, some issues. There is some retrenching. But into the healthcare side, because of COVID, because of different reasons, the health side is seeming to return quicker than any of the other sides of the real estate services. Hospitals, clinics, doctors' offices are returning to pre-pandemic levels. The healthcare is getting back to normal. Demand for real estate is going up. Landlords' rents in this area is almost 100% of pre-COVID levels. So this is exciting and and we believe that could be great opportunities for us. So with that, we started up our REIT section. We had started up at AAMI, which is a medical real estate investment trust management company that allowed us to use the strategic vision to formulate investments strategies for a REIT. We set up a AMRE, which is a REIT itself, to set this and acquire these acquisitions. American Medical REIT is a Maryland corporation organized for the purposes of acquiring these hospitals and other post-acute care centers from clinical operators. We do so with the interest of looking for these hospitals in a dominant market share, but in the secondary and tertiary markets. Each of these, we intend to have a sale leaseback strategy with the operator under a triple net lease. Our usual target is an 8% IRR unleveraged. ARME was formed to originate and acquire these credit-centric portfolios of licensed medical real estate. It is planned to qualify as a real estate investment trust for income tax purposes, which will provide our investors the opportunity for direct ownership in Class A licensed medical facilities. This sector has where we put almost a lot of our assets in the past 90 days. We currently have purchased 4 hospital or acute care centers. We just closed on 3 hospitals, 2 in Texas and 1 in Pennsylvania, for an acquisition price around $65 million. They're currently in their portfolio and currently generating the income. So we're excited about this. We will continue to develop this at a very quick pace. We hope to have, by the end of the year, another add to this portfolio. We hope by 2022 to double the size of this REIT and certainly qualify it to look to immediately taking it public. The other sector is our blockchain Fintech technology area. Blockchain is expected to grow at a remarkable rate, 67% rate by 2025. It is something that we believe we had to be in different formulas. We've reached into this area. We have invested in a company called USX Holdings. It's a participation joint venture with GSX out of Gibraltar. This company's design will be to collaborate with them on a digital asset exchange, literally to an alternative trading systems that will trade in debt, equity, and other assets in an alternative trading platform. This is about a 2-year project. It will take, we're in the infancy stage now. We'll go through the application stage, but we should be able to start generating revenues in the second, in about 1.5 years. The next sector we have an interest in to get into was the renewable energy sector. The renewable energy sector is an area we believe is going to be about $2 billion in expected growth by 2025. We've estimated the market to be a 1.1 billion marketplace today in 2019. Again, huge growth opportunities for exponential growth opportunities. And there's a high capacity for this to convert. There's high political pressures for the conversion of fossil fuels into renewable energy with expected tax credits. We thought that was very important for us. Second, this table shows China comprises 22.9% of the global share. U.S. comprises 20.1% of the global share. Both of those markets we are active in. So gives us great opportunity for almost 40% of the world's demand for this product. We have set up and started a business model for the solar REIT. We're looking for opportunities to have utility scale solar farms to serve a mid-sized to U.S. regional power grids. We like to do this in some type of microgrid approach for independent energy for smaller sectors or communities. Our goal is to put this into place, to power force and mitigation the negative effects that we're having in reducing air pollution, as well as to access to clean energy for all. We also as part of this, looked at Secure Living, a venture where we want to plan a fully sustainable, secure, healthy living community with the homes incorporating advanced technology or energy efficiency and quality of life living for both new construction and renovations. It could be for multifamily as well as single family. Secure Living is working with several land development partners today, and we anticipate developing entire sustainable single family subdivisions here in the next coming year. We've also invested in a derivative of that. We have invested in a company called DS Pure Air. And DS Pure Air and its partner, Puradyne, have a product for surface purification, air purification systems that has been proven to clean a room of viruses within 1 hour. And we will start incorporating those, we hope, into the houses and the constructions that we built, as well as in commercial ventures.
Frank, if I could just add for this audience here, simply put, the DSS has entered in a multitude of business, but the constant is really that we are looking for businesses that not only provide recurring revenue, but are scalable and contemporary in nature. So that has really been the focus of our efforts as we go out and we vet these new opportunities, that we are finding, again, businesses that we believe are contemporary, are going to have a tremendous amount of upside with very limited ceilings, and are scalable and still provide that recurable revenue stream that we're looking for.
That's correct. Thank you, Jason. That's exactly right. The first fundamentals we're looking for is to how to get reoccurring, scalable income. We were traditionally, but in 2019 and before, looking for home run hits. We're looking for scalable income. We're also looking for that income to be driven in companies and in markets where we have exponential growth opportunities. So next slide there is a summary of our holdings currently. I'll just go through a couple of them. HWH World, again, revenue generation is our expectation there of how we're going to monetize that. We'll grow it to a certain specific size, and then we'll look at how to spin that off into its own entity on an IPO. Sharing Services is already publicly traded. It is likely to continue. We'll try to redirect and grow that company's revenues back up to where it was. At one point, it's around $16 million a month in revenues. We hope to return that after some investment into the company. It would also then have the ability to have value to our shareholders because it's already monetized, and would look to have it uplifted. Premier, revenue generation, huge growth opportunities for us there. We'll probably continue to run that as a regional printing and packaging center. Impact Biomedical, yes, we expect huge revenue opportunities to grow there, but we've already announced that we intend to take that on IPO. We are in the process of having that S1 filed and getting it registered for us to get to that point. The other, we already talked about American Medical REIT. Absolutely, we're designing that to be qualified as a tax-exempt medical REIT that we can roll out for public offering. We would hope to do that probably when it gets to a significant size. Spending somewhere between $150 and $200 million would be a nice size to take that public. Allset Energy, again, we will hopefully create that with generate revenue increases. And then USX Holdings is a venture. Obviously, we will anticipate that'll be a 2 or 3 year project. We'll create revenue, and we'll see how the size of the scales in the market brings together on that. All right, we've already talked a little bit about the team we have here. Again, I'm Chief Executive Officer. I've been with DSS since 2019. I have an expertise in my history about 35 years of banking as an accounting and CFO of turnaround, providing a workout, turnaround, restructures expertise. I'm also an attorney as well as an accountant. Jason, you're with us. You take a little bit about yourself for the group and before we go to questions.
Sure. So I've been with the company coming on 11 years. I consider myself a traditional salesman, but always looking for unique opportunities. My background is also in sales, marketing, turnaround, restructuring of companies, and rebranding.
Good. Todd, you want to go ahead and also introduce yourself?
Yeah, thank you, Frank. And I joined DSS through its subsidiary Premier Packaging in 2019. Prior to that, I've got about 25 plus years of both public and private accounting experience, both as a CPA, CFO, et cetera, through multiple industries, including the ones that DSS is now venturing into.
Thank you. And our chairman of the board, Mr. Hang Fing Chai, he has been with us since about 2018 as a director, recently promoted to executive chairman of the board. Mr. Chan has extensive global business veteran of over 40 years. He specializes in financial restructuring and corporate transformations. He has an special success in restructuring companies that were near bankruptcy or near failure. He has over 35 corporations in different industries and countries around the globe. He has served as a director of this company again since 2017. And we are very fortunate to have his expertise in banking, finance, and international businesses. He's located in Singapore with offices in Hong Kong. Okay, with that, I'm glad to turn it over to questions that the audience may have.
Thank you, gentlemen. Well, we are out of time pretty much, but we do have tons of questions for you. Let me ask you one, okay? From James Patrick. How big are the market opportunities you are pursuing currently?
All right, well, I can quickly go over that. We are, again, direct selling. That is a $167 billion industry. Biohealth, a $750 billion industry. Blockchain, 3.7. Securities, $70 trillion. And digital transformation, that's $300+ billion. These are giant opportunities with no cap for us.
Well, that was a quick answer, so let's just try to squeeze in one more real quickly. Alan Ryan wants to know, what anticipated milestones can investors expect of the next 12 to 18 months? And you can end and wrap up with that.
All right, milestones. We would hope to be able to again, our process is a 3-year plan. Each division goes through the opportunity where we buy assets, and then the second phase is to turn those into income-producing assets. And then the third year of the program is then to turn them into positive EBITDA and earning profitability. Each of these are in different stages. So to say that we will have one milestone for each for the entire company is impossible. But I will tell you that there are several of the investments that will turn into milestones this year, we hope. I would think that the Impact Biomedical, as we announced, will have an IPO. And certainly there is possibility that the banking section and in the REIT section, we could see those going public in 2022 if we meet our goals.
All right, gentlemen, we have lots of questions for you, so we will email them to you so you can answer directly on your own time. But we really appreciate your presentation and your time with us. We certainly hope you come join us again with some updates.
All right. Well, thank you for inviting us.
Thank you, Anna.
All right. Thank you. Be well. And stay with us. We have another presentation coming up next. We'll be right back.